Hi folks, welcome to this last part of our problem. Now what we need to do is we need to determine what the fair value through net income investments account balance is going to be on our balance sheet or statement of financial position. So in order to do this, we're at the balance sheet date or at the end of the period. It's December 31st, 2017. So we need to figure out what's the fair value of all the investments that we hold and compare them to what they were set up on our books at. Okay, so now we know that we only have 6,000 of the 9,000 Normala left, right? Those shares. How do we know that? Well, because don't forget, we sold 3,000 of them May the 20th, right? So of that 301,500, once we got rid of 100,500, we only have 201,000 left, right? The other way you could do that, so again, you could do it this way, 301,500 less 100, 500. And that would give you your 201, right? This guy here. So this guy here is going to give you that, right? So the way I did it though is I just said, well, if this is the value for 9,000, I only want the value for 6,000 of 9,000, and that's going to give me the same thing when I multiply 6 over 9 times my original cost, right? Or what they're sitting on my books at now, right? As a whole, for a whole 9,000. So therefore, you can get 201,000 either way. Fair value, they gave that to you in the question, 180,000. Oksana shares, there was no activity in those shares. So we still have them sitting at what we paid for them, right? If you go back here, don't forget, we paid for those shares 52 bucks a pop, right? So they're still sitting there at 260, but don't forget, our fair value now is 275,000, right? And for 7,000 shares, we paid 185.5, but the fair value was changed. So when we do the multiplication, we find out we have $196,000 in fair value. So remember, with the fair value through net income investments, we add up the entire cost of what we have, or the most recent value for the investments on our books, which happens to be cost, 646.5, and compare it to the fair value that was given to you in the question at 651. So we need to make sure that fair value through net income investment account is sitting at 651, because now it's sitting at 646.5. So we have to adjust it upwards by 4,500. So we're going to debit the fair value through net income investment for 4,500, the difference between 651,000 and 646,500, and we're going to credit, because we can see it's a gain of 4,500, we're going to credit for 4,500, right? And don't forget, this is an unrealized gain or loss that we're booking, right? Remember, it's one of the four little guys we said blows through that investment income loss account, the unrealized or holding gains or losses on fair value investments when we adjust the existing investment portfolio to its fair value, and that's what we've done. So now, in the textbook, that would be the end of the question, but I want to go one step further. On the statement of financial position, the fair value through net income investment would sit at 651,000. It sits at 651,000, right? And the investment income loss is going to be sitting in net income. Now, you know what's on the balance sheet for your investments, but what would the value be of the investment income / loss account in net income? Would it be a net investment income or loss debit or credit? If it's a debit, it's a loss. If it's a credit, it's income, right? So let's calculate that. So I want to know, what's that balance? Is it income, which would be a credit balance, or a loss? So let's do a little T account. The old-fashioned T account tells us what? Don't forget, when you bought the investments, you debited the investment income loss for all the brokerage fees, right? When you sold some of those Normala shares, you booked an investment income, when you sold some of those Normala shares, what did you do? You booked an investment income loss credit of $16.50. Don't forget, we did that right here, right? You remember, you could either plug it or you could calculate it. Most students, by the way, plug it. I think it's just easier for them to do. But if you want to verify it or validate it, you go right ahead. $16.50, that's a credit. It's income, right? It's a credit. And then don't forget, you had a $4,500 revaluation of the portfolio here. So if you add up the debits and subtract the credits, you're going to get a net debit of $2,110, which would be an investment income / loss debit, which is a net loss in that account, right? So it's a debit balance. So this concludes another example of our fair value through net income investments. I hope you found it helpful.